You're still watching TVC News at 1. Let's turn attention to business now. The Nigerian National Petroleum Company Exploration and Production Limited and Natural Oilfield Services Limited have announced the successful commencement of oil production of Oil Mining Lease 13 in Akwa Ibom State. The Chief Corporate Communications Officer of NNPC Limited, Mr. OlufemiSoneye, disclosed that the first oil flow from the Oil Mining Lease 13 is a historic milestone in the partnership between NNPC Exploration and Production Limited and Natural Oilfield Services Limited, highlighting their dedication to driving growth and development in Nigeria's oil and gas sector, which remains a vital component of the nation's economy. It's a production which commenced on May 6 with 6,000 barrels of oil, will ramp up to 40,000 barrels per day by May 27. For Nigeria, this will contribute to the country's efforts to increase its oil production capacity, which is crucial for meeting domestic energy needs and driving economic growth. NNPC Exploration and Production Limited is an NNPC Limited's flagship upstream subsidiary, while Natural Oilfield Services Limited is a subsidiary of Sterling Oil Exploration and Energy Production Company. Another story, the latest report published by the World Bank Africa Pulse indicates that Nigeria's revenue from the manufacturing export sector declined by 166% to 778.4 billion naira from 2 trillion naira in 2019. The report reveals that the trend since 2019 has recorded a significant decline to 960.7 billion naira attributed to COVID-19 in 2020, while a minor recovery was recorded in 2021 at 1.15 trillion naira. The global financial institution, however, blamed Nigeria's dwindling foreign trade on poor infrastructure and inefficient logistics, among others, as factors responsible for the decline. The bank report shows the cost of trade in Nigeria and Ethiopia is 4 to 5 times higher than what is obtained in the United States due to insecurity, higher transportation cost, topography, and poor road infrastructure. Now, the Director General of the Nigerian Maritime Administration and Safety Agency, Mr. Dayo Mobiriola, has affirmed his dedication to advancing the maritime sector's growth and prosperity. He made the assurance to stakeholders at an interactive session in Lagos. TVC News Senior Business Correspondent Ifonanya is a report.
During the interactive session, stakeholders emphasized the importance of empowering Nigerian ship owners, enhancing indigenous capacity, and activating the long-awaited cabotage vessel financing fund. Additionally, port and shipping operators urged for duty waivers on vessels acquired by Nigerians to foster healthy competition against foreign counterparts.
Dedication to capacity building, infrastructure development, and environmental protection will most definitely position Nigeria as a key player in the global maritime community. I'm talking about training seafarers, I'm talking about training engineers, I'm talking about training maritime businessmen, because you just don't train the technical people, you train the commercial people to be able to use ships and ports to create value in the economy.
The industry wants to see that affairs of the sector are effectively managed to ensure safe and clean waters, security, organization, and to facilitate business in the industry. The industry wants vessels regularly boarded and inspected, with breaches identified and sanctioned.
Responding to the stakeholders' concerns, the Director General underscored the event's purpose to engage with stakeholders and gather insights. He assured that his management team is committed to fulfilling the agency's mandates.
You can be rest assured that all these points that has been raised would be looked at, considered, and put into our strategy so that there will be a sustainable plan for the maritime sector. And we want that to be one that will be acceptable by the regulator as well as the practitioners.
The gathering attracted a diverse array of stakeholders, including former chief executives of the agency. Ifunanya Eze, TVC News, Lagos.
Senior Advocate of
Outside Nigeria now, Asian shares gain out a 15-month high today in a week where inflation figures could make or break hopes for earlier U.S. rate cut, while Chinese activity data will test optimism about a sustained recovery in the world's number 2 economy. The improved sentiment has helped lift Chinese blue chips to a 7-month high. The index was 0.1% weaker, with some sectors pressured by a report the White House was about to release details of new tariffs on Chinese goods. MSCI's Products Index of Asia Pacific shares outside Japan trimmed up by 0.1% after rallying for 3 weeks straight. Japan's Nikkei slipped 0.3%, still saddled with speculation that further losses for the yen could lead the Bank of Japan to raise rates in the next few months. Euro Stoxx 50 futures added 0.1%, while FTSE futures dipped 0.2%. S&P 500 futures and Nasdaq futures were both up around 0.1% after running last week as companies' earnings came in strong. The latest report shows that retail investors are pulling out of Europe's hedge fund industry, with asset under management shrinking to an 8-year low as higher interest rates and lagging performance send smaller investors elsewhere. According to Kepler Absolute Hedge, asset in alternative undertakings for collective investment in transferable securities funds in Europe contracted 3% to $236.3 billion at the end of March, compared to 0.4% decline in the previous 2 quarters. In the first 3 months of 2024, undertakings for collective investment in transferable securities funds average 2.9% return, compared with a 4.4% average by the wider hedge fund industry. Overall assets fell by $7.6 billion from alternative undertakings for collective investment in transferable securities funds in the first quarter, mostly from multi-strategy, macroeconomic, and deals-focused funds, while some hedge fund strategies like managed futures saw growth. According to the French presidency, Amazon and other companies, including GSK and Accenture, will announce investment worth billions as part of the country's annual Choose France event, which begins today. Amazon to invest more than 1.2 billion euros in its French operations and create more than 3,000 permanent jobs in the country. Amazon has invested more than 20 billion euros in its French operations since 2010 and employs more than 22,000 permanent employees across the cloud and online retail businesses, which is in addition to 2,000 jobs announced for 2024. A part of the investment will also be used to expand its logistics network to increase the speed of delivery and reduce carbon emission. And in the crude oil space, prices extended declines earlier today amid signs of weak fuel demand, and as comment from the U.S. Federal Reserve officials dampened hopes of interest rate cuts, which could slow growth and crimp energy use in the world's biggest economy. U.S. West Texas Intermediate crude rose to sell at $70.27 per barrel, with an upward price margin of 0.01%. Brent crude futures also experienced a price decline of 0.02%, selling at $82.77 per barrel. And Bonnie Light also recorded a downward price review of 0.37%, selling at $84.11 per barrel. And for the OPEC basket, crude oil dealers are offering $84.30 per barrel, with an upward price margin of 0.84%. Well, and that's it for business. Next is sport. Please stay with us.